Good afternoon. This is Brad Dennis with BIS Commodities with your weekly wrap-up for commodities. This will be the last week of January, first day of February. To start off, let's start off in grains. Grains have not seen any volatility for quite some time lately. Lack of government reports coming out have not increased or have not caused anybody to break grains out of their ranges. So with that lack of new information coming in here, we have been range bound on both corn and on wheat. Now, a lot of speculation about what was going to happen this week with China coming into the U.S. and having some higher grade talks with the U.S. about trade and such, and that left a positive spin on the market last night. The Chinese came in and said, hey, we're going to buy 5 million metric ton more of beans as a goodwill gesture to keep these negotiations going. So overnight market looked at that and said, hey, that's a great thing for beans, and beans were up about 13 cents today on a big move for beans as of late because nothing's been trading because of lack of volatility. Well, by the end of the day, we were only up 2 cents, and I think that probably puts beans down about 8 cents on the week. So what we've got to understand with these trade talks is they'll come out and they'll make promises about buying X amount of agriculture, X amount of this, when the agreement is struck, but the president also said that, hey, it's going to be a comprehensive deal, and we're not going to get just one side. We're going to get one side with the other side. And the intellectual property side of this trade negotiations, the IT side of this negotiation is very tough right now, and they're worlds apart in it. So we're nowhere near seeing the end of these negotiations. We've seen a lot of speculation on what's going to happen if there is an agreement, but to say that that's happening right now is not the case. Now, this 5 million metric ton, that's like the earlier 5 million that they did before. We saw bases firm up in some areas here, so I think that they were sniffing around for some beans in the first quarter of the year. I mean, but if you're only buying a million metric ton, 37 million bushels of beans in the first 4 months of the year, that hardly does anything to the supply and demand report. And that supply and demand report is going to come out on Friday of next week, which we'll finally see some government reports out. They're at least doing the supply and demand report in the accurate way, or the right way in my eyes, and I could be wrong on this, but it seems that on Friday they're going to show both the January supply and demand report and the February supply and demand report, small grains report, and I believe that's it. Oh, kettle on feed will be coming out then too. So we'll get a past number yet a present number. Whereas with export sales, they're going to release these sales from back in December, in January, back in February, and will be released in February. So you're a month off. It's something that's already been factored in the market, and it has us going out to approximately February 22nd to get all the reports that have been backlogged. Well, the government might shut down on February 15th. So I'm sorry, but the way that they're doing export sales and that sort of thing is moronic. The way they're doing the commitment of traders is the same way. We need real-time data out there, and we should have it, at least with the supply and demand report. We will get that. And we'll have estimates on our website next week as to what those estimates are for the January and February supply and demand report. So when it's all said at the end of the day, buy the rumor, sell the fact. China's going to come in, buy some more beans, but that's their state-owned. Remember, beans are still cheaper coming out of Brazil, so that's what the private's going to buy. So does it really help the balance sheet or not? Probably not. I mean, we're still not making up that business that was lost the past 3 months or so. In corn, we're still stuck in 370 to 390 range. In wheat, we're still stuck about $5 to 530. I think we got up to today. 544 is pretty much a pretty good resistance on those maize. So we'll kind of keep an eye on that stuff. But for right now, beans going up to the upper end of their range pulled everything up. But with beans retreating back down, we still need to have some kind of issues with the corn crop down in South America, which we're not seeing right now. Safrinha crop is going in good, or the wheat crop, and we'll hear stories about winter kill possibly next week with all this cold weather that has gone through. So we'll see what happens with all that. Over in the energies, energies were up today. They've got a pretty good positive chart pattern too, and what we're looking at is a couple things. U.S. rigs declined by about 15 as of last week, and OPEC's output is the lowest it's been in 2 years. So they are cutting back their output. Still, shale's doing great, and we're getting some good localized or domestic oil production. But everybody's trading this on a global basis, and they're looking at OPEC and they're saying, all right, if they're reducing their numbers, then we probably have less supply out there. Also, they're looking at Venezuela and taking that 350,000 a day off the market. That's a heavier crude, so it affects the distillates a little bit more, but it's one that we don't really see too much here in the U.S. as well. So it's something that's kind of needed. With that being said, we do have a positive chart pattern, which could see a 57, 59 level tested next week. The S&P. S&P is a classic example of good news is bad for the market, bad news is good for the market. So earlier this week, Powell talks from the FOMC, says, hey, you know what, we're going to take data as is on a day-to-day basis, and then we're going to address whether or not we need to raise interest rates, which is much more dovish than where they were at. They also talked about the balance sheet. In the balance sheet, they've been selling off some of their treasuries and such, reducing the balance sheet. Well, they're going to stop doing that to a certain extent. So that is basically not a QE type thing, but stopping that procedure is also something that's looked at as dovish. All right, so dovish. We can't raise interest rates because that'll hurt the economy. All right, so that bad news gets into the market. They say, well, interest rates aren't going to go up, so they buy the S&P. Today we see non-farm payrolls. It's supposed to be 170,000, 304,000. ISM manufacturing was over 56. They were looking at 54 on that. So it's still expansion there. So two very good numbers, and we closed the S&P 500 down $5. Good news means lower S&P because it brings back in that chance that if the economy is heating up, we have to raise interest rates. Bottom line is the domestic economy in the U.S. is doing fine. It's doing very well. Good sales over the holiday time and such. But it's the global economy that everybody's worried about. And you got to look at that global economy. China, part of that global economy, they're going to do anything that they can to stimulate their economy. So they're going to throw procedures out there that, whether it's detrimental in 10 years or not, doesn't matter. They're going to throw as much stimulus at it to keep it growing. Now you got to watch Germany too. Germany's really fallen off the side. But with them being part of the EU, they've been able to stabilize that so much. And we're not looking at a hawkish kind of philosophy out of Juncker and the EU at all. So things to look at there, just from an interest rate standpoint and the stock market standpoint. Right now we're in the mode of bad news is good for the stock market, good news is bad news for the stock market. Finally, wrap up with cattle. all this week. We've gotten past the weather situation of the cold polar vortex coming down here. We do see down the road, North Dakota, South Dakota, and Nebraska might get a little chilly, but not to the certain extent that we saw in Cedar Rapids and Chicago these past few days. So that's past us. We're watching product come off substantially in the cattle market. I think we were choice was probably down from a 219 level to around 215, 214 by the end of the week, so down $5 on that. We tried to back off cattle, but we're not quite there yet. So we've got a little bit of derogatory or a little bit of bearishness in this cattle market. And another thing that kind of adds to that is we've had some dark days with the weather causing shutdowns at some slaughterhouses and such, so that we're not using up the cattle. Our slaughter count is down, so we're not using up the cattle as much. Granted, weights are down about $10, and that's due to some of this frigid weather, but that's not being taken into account now. The numbers is what they're looking at, and cattle will be backed up next week for a little while, and traders will have to deal with that, and we'll have to find a break-even spot. Now, February being front month, right around that 125 level, heard of 121 bids in Texas. As of this report, haven't seen anything trade out there, so we'll see what the trade is on late Friday. But big news for next week is just seeing that S&D report out on Friday. That's good to see a government report out there that's actually going to be accurate and timely. And other than that,